Is Bitcoin about to make a massive comeback? In this video, we dive into the latest shocking move made by the world's largest cryptocurrency. From sudden price swings to surprising trends, we'll break down what this means for investors and the future of Bitcoin. Stay ahead of the curve and find out what's next for BTC. Join me as I dive into the crazy world of Bitcoin and try to figure out what this shocking move really means for all of us. Bitcoin's recent move has sent shockwaves through the market, and it's significant for both investors and the market as a whole. The cryptocurrency market is facing numerous challenges, including volatility and regulatory concerns that affect Bitcoin's performance. Volatility is a major issue, as it can lead to significant price fluctuations in a short period. Regulatory concerns are also a major headache, as governments and institutions are still trying to figure out how to deal with cryptocurrencies. Bitcoin's price has been affected by these concerns, and it's essential to consider them when analyzing its recent move. The market is constantly changing, and investors need to stay up to date with the latest developments to make informed decisions. Investors are also worried about the potential risks associated with Bitcoin, such as security threats and market manipulation. These risks can have a significant impact on Bitcoin's price and the overall market. The cryptocurrency market is still relatively new, and it's not yet clear how it will evolve in the future. Despite these challenges, many investors remain optimistic about Bitcoin's potential. The current market trends are also influencing Bitcoin's performance, with some investors looking to diversify their portfolios and others seeking to capitalize on the potential for high returns. Market trends can be unpredictable, and it's crucial to stay informed to make the most of investment opportunities. Factors such as market trends, investor sentiment, and news events have all contributed to Bitcoin's recent move. Investor sentiment plays a significant role, as it can influence the demand for Bitcoin and drive its price up or down. News events, such as changes in regulations or major security breaches, can also have a significant impact on Bitcoin's price. The recent move is a result of a combination of these factors, and understanding them is crucial to making sense of what's happening. The price of Bitcoin has been heavily influenced by market trends, with some trends indicating a potential increase in value. Investor sentiment is also crucial, as positive sentiment can drive the price up, while negative sentiment can lead to a decline. News events have also played a significant role, with major announcements and changes in the market affecting Bitcoin's price. The combination of these factors has led to the recent shocking move. The recent move has significant implications for the future of Bitcoin and investor strategies. One of the most impactful moments was the recent announcement by a major institution to invest in Bitcoin, which has led to a surge in interest and investment. This decision has highlighted the potential for institutional investment in Bitcoin and could lead to increased demand and a higher price. The implications of this move are far-reaching, and investors need to consider them when making decisions about their portfolios. The announcement has also led to increased confidence in Bitcoin's potential, with many investors now seeing it as a legitimate investment opportunity. This increased confidence could lead to further investment and a higher price, but it's essential to remember that the cryptocurrency market is highly volatile. The move has also led to increased scrutiny of Bitcoin and the cryptocurrency market as a whole, with regulators and institutions taking a closer look at the potential risks and benefits. The move has significant implications for investor strategies, as it highlights the potential for high returns but also the risks associated with investing in Bitcoin. Investors need to carefully consider their options and make informed decisions based on their own risk tolerance and investment goals. The recent move has also led to increased interest in other cryptocurrencies, as investors look to diversify their portfolios and capitalize on potential gains. In early April 2025, global financial markets faced significant turbulence due to the announcement of substantial tariffs by the US government. On April 2, President Donald Trump introduced a 10% tariff on all imported goods, with additional levies targeting specific countries, including a 34% tariff on Chinese imports and 20% on European Union goods. These measures were implemented on April 5, causing a sharp drop in major stock indices. The Dow Jones Industrial Average fell by over 1,344 points, a 3.22% decrease, and the S&P 500 dropped by 3.15%. This led to the US stock market losing more than $3 trillion in value. The technology sector, particularly companies like Tesla and Apple, saw significant losses, with the Nasdaq Composite entering bear market territory after a 5.8% drop on April 4. Tyler Ritchie, a market analyst at Sevens Report, has expressed caution about Bitcoin's recent decline. He points out that Bitcoin's drop to $74,436 has brought it close to a critical support level around $73,745. If Bitcoin fails to maintain this support, Ritchie predicts further declines could follow, potentially sending its price down to the $55,000 to $57,000 range. His outlook reflects concerns about Bitcoin's ability to sustain its current position in a volatile market environment. Mike McGlone, a senior commodity strategist at Bloomberg, offers a more bearish perspective. McGlone suggests that Bitcoin could fall to $10,000, which he believes would be a reversion to its long-term mean. He attributes this potential decline to what he perceives as speculative excess in the crypto market and argues that Bitcoin's price may need to stabilize at a more sustainable level. McGlone's outlook reflects concerns about overvaluation and the broader macroeconomic conditions that may impact cryptocurrency markets. Crypto analyst Carl Moon, on the other hand, holds a more optimistic view. Despite the recent market turbulence, Moon foresees a significant rebound for Bitcoin in the coming months. He believes that Bitcoin's current price decline is temporary and predicts a huge bounce, where Bitcoin could experience a sharp recovery. This upbeat outlook highlights Moon's confidence in Bitcoin's long-term potential, suggesting that the cryptocurrency will likely regain momentum despite short-term volatility. Arthur Hayes, the former CEO of BitMEX, offers an ambitious prediction for Bitcoin's future. Hayes believes that Bitcoin could soar to as high as $250,000 by 2025 if the Federal Reserve shifts its monetary policy toward quantitative easing. This policy change would increase the supply of fiat currency, which Hayes argues would fuel demand for alternative assets like Bitcoin. Hayes' prediction is rooted in his broader thesis that Bitcoin serves as a hedge against inflation and economic instability, particularly when central banks adopt more aggressive monetary policies. Nick Puckrin, the CEO of Coin Bureau, draws comparisons between Bitcoin's current market behavior and its performance in 2017. He suggests that Bitcoin could repeat a breakout pattern similar to the one it experienced in 2017, which saw the cryptocurrency experience a massive 360% rally. Puckrin believes that the current market conditions are conducive to a similar surge, where Bitcoin could potentially achieve significant price gains in the months ahead. His perspective is grounded in the historical patterns of Bitcoin's price movements, which often exhibit strong bullish trends after periods of consolidation. These expert opinions present a wide range of predictions for Bitcoin, from cautious concerns about potential declines to bold forecasts of substantial price increases. The varying views reflect the uncertainty and complexity of the cryptocurrency market, highlighting both risks and opportunities for investors. Meanwhile, Bitcoin mirrored the volatility in traditional markets. After reaching an all-time high of $108,239 in December 2024, Bitcoin's price saw fluctuations, with its value around $83,170 in early April 2025. Experts remain divided on Bitcoin's future trajectory. Jeffrey Kendrick from Standard Chartered predicts Bitcoin could reach $200,000 by the end of 2025 due to continued institutional adoption and regulatory reforms. Finance professor Carol Alexander shares a similar view, suggesting that supportive U.S. regulations could push Bitcoin's price to $200,000. Bitcoin's recognition by governments is increasing as well. Oklahoma recently passed a bill to establish a strategic Bitcoin reserve, joining other states like Texas, Arizona, and Utah in recognizing Bitcoin as a treasury asset. This shift highlights growing institutional confidence in Bitcoin as a store of value. Looking ahead, Bitcoin's price movement will likely be influenced by regulatory changes, macroeconomic factors, and its continued integration into traditional financial systems. While some analysts forecast significant price growth, Bitcoin's inherent volatility means investors must remain cautious amid these evolving market dynamics. Bitcoin's recent shocking move has significant implications for the market and investors. The move is a result of a combination of factors, including market trends, investor sentiment, and news events. Let me know what you think about Bitcoin's move in the comments below, And if you're interested in learning more about the cryptocurrency market, check out my previous video for some valuable insights.